Hello again, everyone. In this technical analysis of the stock market video, I call it extended and compressed because that's what this market is. We've had one heck of a run, and this last week got pretty compressed in terms of the price action. We'll take a look at all that. We're also going to look at one of my favorite sentiment indicators I like to look at, check in on oil, see what it's telling us, and then also on the Shanghai Composite. So let's start off here with the NYSE Composite Index. Now this is one of the most broadest, nice English. This is probably one of the broader indexes that it's out there. I think it's like over 2,600 or something like that, stocks and related type of ETFs, etc., that are in it. This has been the one that's been the most bearish. Okay. This is the one that never went to a new high after that peak in January 2018. So we had a wave 1 down, a wave 2, and now we've got a wave 3. Now, a lot of people are trying to look at this and say, and in the same with some of the other indices, and say, well, we've got a nice little A, B, C, and aren't we done? Isn't this, a fourth wave in here? And that this was really a third wave? And that now we're off and running. And I'm like, not so fast. And the reason is, when you have a zigzag like that, okay, and let me get my pen back. When you have a zigzag in here, like here, here, and here, this needs to be a 5 wave, which we had. This needs to be a 3 wave, which we had, a WXY. And then the C wave needs to be a 5 wave also, okay, for the ABC. A C wave is either an impulsive wave or a diagonal. Usually it's an impulsive wave. There's not a 5 wave structure in here right now. Okay. And it doesn't matter what index you go and look at, you're not going to see a 5 wave structure in this move to the downside. Okay. That's why I have a really, really hard time. Well, especially with this index, I've got a really, really hard time drawing a bullish scenario that the corrective wave is done. Okay. That is why I'm sticking with the wave count that I've got in here, that this is a flat. Let me go ahead and go into the daily view. Actually, before I go into the daily view, I want the thing about extended. I talked about extended and compressed. Let's focus on the compression. This last week's price action here on the New York Composite was a total range of about 140 points, 139.71. If you look back in here, this one was a little tighter. This was 245, not as tight as what we had this last week. You've got to go all the way back in here to the week of September 2nd. To have a week with as tight a compression as we just had. Now, some would say, well, this was just a 4-day week. It was a holiday week. Well, guess what? There were plenty of holidays, around, Christmas, the 1st of January, Thanksgiving. I think there was another one in October. There were plenty of holidays in here. This is still the most compressed trading week since the week of September 2nd. That's why this market is really compressed, and it's very compressed at the end of a pretty big run. Let's take a look at the daily chart. Okay, so here's the daily chart, and I'm talking, why is this extended? When I look at this and I look at the ratio of the C wave versus the A, this is a flat, C versus A. We're up here at 261.8% of A, okay, when I measure C versus A. Now, this is well beyond what I normally would look for in a flat, but this is very much an irregular type of correction. Okay, we got an extended B wave down here too. Now, again, people are looking at this and go, well, how come this isn't a 5 wave or whatever? When I look at it and when I drill down, the best interpretation is that it's a 3 wave. And let me see if I can get the detail in here. If I can press the right button, there we go. Here's what we're talking about. This is a WXY, and I'll go over to take a look at the hourly chart in a minute. So we've got a 3 wave A, a 3 wave B, and we're working a 5 wave C. And we're getting very, very extended in here. There's no doubt. And so the real question is, how much further can we go? Who knows? This market's gone already a lot further to the upside. I mean, here's the thing. We got very oversold, extremely oversold down here. And then we got extremely overbought back up in here, and we've continued to push higher. So that is the picture. Let me take a quick look at the hourly. This B wave is what I wanted to focus on in the hourly. Okay, so this wave in here. This WXY fits this beautifully. Because in a W, when you do this for a combined corrective, it's basically we got two zigzags. We got an ABC zigzag, and then we got another ABC zigzag. And it fits it beautifully in terms of the wave structure. That's why I have a high degree of confidence that this is a WXY. Believe me, I've played around with the 5 waves. I've done it, quite a bit. And this is the one that I feel I have the highest degree of confidence in. All right, so that's the wave structure we've got. Enough on the New York Composite. Let's take a look at one of my sentiment indicators. I look at this every day with my insider members, and what we're looking at here is the Chicago Board of Options Exchange, CBOE, equity only put to call volume ratios. So in this column, it's the actual reading. So on Friday, there were 62 puts for every 100 calls, okay? And so when it gets down below into the 50s, it becomes, I shade it as red. And when it gets below 50, I shade it a darker red. And when it gets below 40, I shade it even darker, okay? Pretty rare situation. Over here is the 10-day moving average of that reading, okay? When it gets below 60, I shade it as yellow. Because what's happening is there's getting to be excessive bullishness, okay, that's showing up in the sentiment of the, how many puts versus calls being traded. Well, we haven't had this reading. Now, again, this can go on for quite a while, getting shaded in the yellow here. But I was just going to point out that we haven't had that since, notice how we got the green as we got to the end of December in some of these readings, with the heavy put buying that was going on. We haven't had the yellow since back here at the end of September, moving into October 3rd. And we had a previous stint here at the August high when one of the indexes, I can't remember which, was peaking out also. So that's the put to call ratio I look at. We're getting that excessive bullishness kicking in a little bit. And, at the end of the run with compression. So I find the timing pretty interesting. Let's take a look at oil. Okay, this is a chart of USO that ETF to follow and track oil. And back here, I've got the very high reading happened in, where was this? June, July of 2008. Remember when oil was approaching $150 a barrel? And then it blued out and it collapsed down here into this low in February 2009. And then, so basically, I feel like the Elliott Wave structure is that we're in a 5th wave to the downside, okay? Now, within this 5th wave, big cycle waves, okay, I believe that we're working a 5-wave move to the downside. Let me drill in a little bit. Okay, so in oil, we had this ABC counter trend, wave 4, cycle wave 4 in here. Okay, then it sold off pretty heavy duty, and it broke this trend line with a first wave down. Very strong first wave. Now we're getting this second wave back. Let's go and take a look at the daily chart. Pretty interesting that where was the peak in oil here? October 3rd. That's when the Dow peaked, okay, before the sell-off. Where was the bottom in oil of the first wave? December 26th. Now we're getting the counter trend in oil, and we're rapidly approaching or about to the 50% level in terms of retracement of that first wave back, okay? So I think we're getting pretty close. We don't have any strong divergence or anything showing up. We don't have to get it. It doesn't show up all the time at tops. So, I think we're kind of in sync where there's a real possibility that this is getting ready to, I'm looking for this to roll over because we've retraced a decent amount right now. It's exactly what I'm looking for in the market. But again, you have to, it needs to happen. In other words, price action needs to break down. Okay, let's take a look at the Shanghai Composite. I've talked about this before and on a pretty regular basis, so you know that I believe that this is in a pretty strong downtrend. I believe we have intermediate wave 1 complete, that we're working intermediate wave 2, and that we've got a nice ABC flat that's going on, so it's not been a surprise at all that it's been rallying. And if you happen to look for the dates in here, this is a daily chart, by the way. A Shanghai Composite was shut down for an entire week there when they had the Chinese New Year and the Spring Festival that went on. So it closed on the high on Friday. Big move up 52 points on Friday. It's really interesting that when I look at C versus A, we're right at 138.2%, just slightly above that level. That's normally what I'm expecting in a flat for C to extend to, okay? That's why I was really surprised in terms of how far it's extended in the stock market. But so right now, the fact that we've gotten up into this, we're back into the previous fourth wave. Here's the previous fourth wave, okay? So we've definitely retraced enough into this move. I'll be watching for the Shanghai Composite to roll over and break down also. All right, long video. That's it for this weekend. I hope if you felt like the video was helpful, hit the thumbs up button. If you're not a subscriber, subscribe. And if you'd like to get more of this kind of information, head on over to joehenches.net, where you can do one of two things: either get on the free videos or subscribe and become a member. All right, everyone, have a great weekend.